Business editor Richard Southern joins us now with a look at business headlines. It has been a wild ride on the markets in 2020. We're only at the halfway point, Richard. How are things looking?
Yeah, I mean, obviously we saw that terrible sell-off in mid to late March because of the pandemic. And if I had told you then, Janella, 3 months later, we'd be talking about a historically good second quarter, you'd probably say, Richard, get out of here. But that's where we are. We just closed out the second quarter, and it was one of the best in decades, believe it or not. So we have the TSX picking up more than 100 points today. It's a pretty good Tuesday trade. But then when you look at the past 3 months, the TSX was up 16%. Now, it's still down 7.4% on the year, but again, pretty solid comeback. Dow up 18% in the second quarter. S&P 500 up almost 20%. Its best second quarter on record. But where you wanted to have your money, Janella, was in the tech-heavy NASDAQ index, up 30% in the quarter, up 12.1% on the year. Tech stocks have been the place to be this year. However, with all this said, the price for gold closed at its highest today since 2011, and that kind of signals that investors might be worried about what lays on the horizon. You know, we've seen the U.S. COVID numbers tick higher in the past week or two, so there could be some bumpy times ahead. But the last 3 months, pretty good indeed. Wow, interesting. Yeah, but I guess you make a good point, too, that, you know, when it had gone down so much, there's a lot of room to go up, right? It presented a good buying opportunity. Central banks really drove investors back to the markets. There was a lot of things that went right for stocks. Interesting. Okay, lots of things are slowly reopening, including movie theaters across the country, but things are going to look a little different. They are. So Cineplex today, they came out with their earnings, and it was, terrible numbers. They haven't shown a movie since mid-March, right? And they said, listen, we're going to need some new investment here to continue going to continue on as a going concern. So there's real serious questions about this business, Cineplex. The loss for the quarter totaled $178 million. However, Cineplex is starting to open some theaters, not in Ontario, but in a number of other provinces this week. They are reduced capacity, only a few concessions, only popcorn, hot dogs, nachos, and fountain pop. There's no new movies to be shown, so tickets will cost only $5. They're hoping to bring people back in. Yeah, that's not bad, Janella. The stock, though, Cineplex, down almost 19% today on Bay Street. Wow. I don't know, $5, that might bring me out to the movie theater, although I don't know how comfortable it'll be to watch movies with the mask on. Not a bad deal. Some air conditioning, too, but again, not here in Ontario, not yet. We'll let you know when they do open here. A nice change from my living room. Okay. Exactly. We know travel this time, travel right now, the demand is low, and we're seeing the result of that. Air Canada slashing a number of domestic routes. Yeah, this real sign of just how bad things are. Air Canada doing away with 30 routes. Only a few of them affect us here in the GTA, Janella. They are Kingston, Toronto, London, Ontario to Ottawa, North Bay to Toronto, and Windsor to Montreal. Those are all gone for good. However, Air Canada says in the coming weeks it could cut more routes as it looks to adapt to a huge collapse in the demand for air travel. We heard from aircraft manufacturer Airbus today. It cut 15,000 jobs. It said air travel won't be back to pre-pandemic levels until 2025. Wow. Janella, you and I are back just after 6:30. Canada Day tomorrow. We're going to play some Canada Day trivia and see what type of Canucks you and I really are. Okay, I'll try not to cheat. Okay, thanks, Janella. See you then.